Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update. I hope you've all had a smashing Sunday so far. We're going to start things off with some pretty positive news for the digital asset space or the cryptocurrency market. We've been very, I don't want to say doom and gloom, but, very bearish on the short-term outlook for the cryptocurrency industry. And the reason being is it's not that I'm bearish necessarily on crypto, it's just that I think markets are driven by liquidity and what comes in and out of them on a day-to-day basis. And right now liquidity is getting really, it's really contracting, which doesn't really fill me with the confidence that we're going to enter a runaway bull market anytime soon. And I actually see more downside before I see that upside. That being said, I'm not actually bearish on crypto for crypto. I'm bearish on the cryptocurrency market given everything else that's going on. In regards to crypto, I absolutely think it's going to shape the future that we are moving towards. I do truly believe blockchain is a revolution, and we see blockchain adoption continue, and certainly Bitcoin adoption continue to gain momentum day in and day out. And we're going to kick things off with this article from Finbold. Bank for international settlements to allow banks to keep 1% of reserves in Bitcoin. This is absolutely huge news. I saw this. I believe it was retweeted from CZ of Binance. We'll read a little bit of it and then we'll get into some other things. And I'm also going to be going back over the executive order that was signed by Biden to essentially ensure responsible development of digital assets. This came out in March. I said at the time, this was, regulation is going to be the very next catalyst, I believe, for money flowing back into the cryptocurrency market. Now, conditions also have to be met to allow that, like not being in a recession is quite a big one. I do believe we are, if not very near to a recession, and we'll talk about that a little bit later on in the video. And we'll also go, Jeff Bezos actually clapped back at President Biden, who is essentially blaming gas stations and companies for inflation, which is interesting. I happen to disagree with that, but we'll read this article and then we'll get into it all. We'll also, again, dive into the executive order that was signed by Biden because it has some really interesting things in here, talking about technologies and trying to be the leader of emerging technologies in response to cryptocurrency. And then I'll take a look at the Bank of International Settlements actual website where they talk about technologies and leveraging technologies to really advance the banking world in a changing world. So Bank of International Settlements to allow banks to keep 1% of reserves in Bitcoin. Despite its skeptic approach to digital currencies, exacerbated by the recent cryptocurrency market crash, it looks like the Bank of International Settlements, BIS for short, intends to extend its hand to the new asset class by allowing banks to hold up to 1% of reserves in cryptocurrencies such as Bitcoin. So the new asset class. I absolutely think crypto isn't going anywhere. It's very much here to stay. That's why we see the likes of Citigroup look to facilitate trading of this asset class. It's why we see BlackRock getting involved. All the big institutions and sort of commercial players are all moving towards and turning their hands towards the cryptocurrency market space. That should tell you everything that you need to know. We know why crypto's selling off at the moment. It has everything to do with external markets and geopolitical issues and monetary policy, and really the Fed tightening and squeezing liquidity across the board. Indeed, BIS's Basel Committee on Banking Supervision, BCBS, has made the proposal for limiting the bank's total exposure to Group 2 cryptocurrencies to 1% of Tier 1 capital in its consultative document titled Second Consultation on the Prudential Treatment of Crypto Assets, published on June the 30th. So this came out 4 days ago. It talks about Group 1 versus Group 2 assets and lists a number of things like stable coins and, of course, Bitcoin and other cryptocurrency assets. It talks about unbacked crypto assets. So really that's referring to things that are, not Tether and not sort of pegged to a dollar, or in Tether's case, backed by treasuries largely. And this is a real, advancement forwards and is another step towards adoption. I believe if you look at hedge funds and all these other, large institutions that sort of hold and manage capital, their allocation to crypto generally isn't, is non-existent in most cases. This will change in the coming years. I absolutely believe that. And I think regulation, which we're going to get onto in a second, is going to be one of the real drivers of that. Banks' exposure to Group 2 crypto assets will be subject to an exposure limit. Banks must apply the exposure limit to their aggregate exposure to Group 2 crypto assets, including both direct holdings, cash and derivatives, and indirect holdings, i.e. those via investment funds, ETFs, ETNs, and special purpose vehicles. So this is obviously quoting from the actual article, but this is a really positive step in the right direction. Some people may say, okay, well, it's only 1%. Doesn't that really limit the amount of growth that crypto could see? Let me tell you right now, if banks allocated 1% to crypto, you would see a huge move in this market. However, I think what's really going to spur them on for this is going to be regulatory clarity, which we currently don't have. Gensler came out, I think, last week and said the only crypto that he's certain is not a security is indeed Bitcoin, which essentially propelled Grayscale to look to sue them over not allowing their GBTC to be converted into a spot Bitcoin ETF. Fact sheet, President Biden to sign executive order on ensuring responsible development of digital assets. Now, this came out in March this year, so it's not new. I think it tasked them 180 days. So given the fact that it's now the 7th month of the year, and this came out in the 3rd month of the year, we're not far away from this at all. And it was really tasking the sort of Senate, Congress to protect US customers, investors, and businesses, protect US and global finance stability, and mitigate systemic risk, mitigate the illicit finance and nation security risks posed by the illicit use of digital assets. This is where it gets interesting. Promote US leadership in technology and economic competitiveness to reinforce US leadership in the global financial system. I think this is why stablecoins are really going to play a role, as we're going to see. I actually think it's good for the US that we have stablecoins because it furthers their endeavors. If everybody can use the US dollar seamlessly through an app, and they don't need to actually be a US citizen or have exposure to it that way. You think about other countries. I mean, I've been to countries before that aren't the US, but they accept US dollars. Well, now everybody could accept US dollars through the likes of stablecoins. So always interesting to think about. Promote equitable access to safe and affordable financial services. So, we know that there's a large part of the world's population that actually is not banked. Well, we now onboard them through crypto. This is why I'm so bullish. I mean, we speak about ADA and their real goal for Africa and why that's such a good strategic move. Yes, it's going to take a while to build the infrastructure, but if that sort of portion of the market gets very much captured and onboarded, it's a huge endeavor moving forwards. Support technological advancements and ensure responsible development of use of digital assets. This is, and even the executive order itself is calling it this, just like, the Bank of International Settlements is calling it crypto assets, an asset class. This is very much a technological advancement. This is why we're so bullish moving forwards. Crypto is not dead and it absolutely comes back. Right now, and we've gone into great detail on why the price action is doing what it's doing. It has everything to do with external markets and liquidity, i.e. really dollar liquidity for the most part, but global liquidity. And you've got to think, and we will get into it in just a second. People are getting pinched and punched at every point. The consumer is really getting squeezed, and that doesn't really allow for a flourishing environment. So this is huge news. Obviously, the Bank of International Settlements, if you go over to their website, you can see our medium-term strategy, Innovations BIS 2025. Leverage technology and a new collaboration channels to serve the central bank community in this fast-changing world. Talking largely about cryptocurrency. They've kind of acted like they weren't really paying attention to it, but believe me, they absolutely are paying attention to this industry. It's changing the world, whether we like to admit it or not. And soon, in our lifetimes, we're going to be using blockchain as a technology, just like we use the internet or we use, the motor industry, for example. We all drive cars. Let's take a look at the cryptocurrency market very quickly before we get into a little bit more news. You guys know that we are going to keep on with this downtrend until we see reason to suggest otherwise. This is not a clear bottom that we've seen. Historical metrics and on-chain data don't really count given the unprecedented times that we find ourselves in. If you look at markets since Bitcoin was created, we've pulled up the NASDAQ 1,000,001 times now. They've essentially just gone up. This is 2008 over here, guys, where I'm hovering my cursor. Markets have essentially just gone up in that time period. So if we overlay Bitcoin on top of this, you know, you can really, the message becomes very clear. This is the first time that we're entering probably a recessionary environment. I don't think a recession is avoidable at this point in Bitcoin's lifetime. So it's going to be very interesting and very telling to see how it reacts during this environment. But for me, that ultimately leads to more downside. Certainly when you give the fact that markets are all about liquidity, dollar liquidity is at pretty much all-time lows, or not all-time lows, lowest in you know, tens of years, so lowest in like 20 plus years. And also, you know, think about your everyday individual and then pumping money into markets. They don't have that money to pump in any more. This was from Jeff Bezos, which I found very interesting, sort of clapping back at President Biden. Ouch, inflation is far too important a problem for the White House to keep making statements like this. It's either straight ahead misdirection or a deep misunderstanding of basic market dynamics. This was from Biden. My message to the companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril. Bring down the price you are charging at the pumps to reflect the cost you are paying for the product, and do it now. Very interesting, given just how much tax the government add on to the likes of petrol, the likes of basically everything that you consume. If they, you know, they have really the powers to they should be the ones doing this, not the companies, you know, the individual small businesses. I know gas station or petrol or diesel station in the UK owners, and often they're small business owners that do all right for themselves, but they have, you know, to make a living just like everybody else, and they're also getting pinched and punched at as a result of everything going on. So very ill-placed message. I think, you know, the consensus, I think, is that we got the midterms coming up, so it's going to be very interesting to see what they pull out of their hat moving into that. You know, are they going to do something in regards to maybe helping out markets in some form or another, or you know, we'll see what happens running into that. This is in the last quarter. Household withdrew $82 billion in equity from their houses, the most in 15 years. Again, unprecedented times. You know, the last time this was the case was really, you know, on the run up to 2008. And prior to that, we saw it on the run up really to the dot-com boom. So this is really just a sign of the times. Mortgage equity withdrawal. People need more money. They're getting squeezed, and they're looking for it in the likes of their housing, which actually levers them up in more debt, and debt is becoming more expensive. This from Dear Martini, or Danielle Dear Martini, basically talking about used car sales have actually dropped from expectations. All an indication that we have a slowing down economy. We also had the Atlanta Fed basically come out and give their forecast, which very much suggested that, you know, GDP isn't going to be doing too well moving forward. Last little bit of good news is Ethereum average gas fees fall to $1.57, the lowest since 2020. Shows a real lack of usage. Certainly if we look at DeFi, DeFi's got absolutely tanked given all the sort of uncertainty and shaky ground that we've seen over the past couple of weeks. You know, we're seeing DeFi absolutely capitulate, and we're seeing many DeFi products actually unfold to be very ill-managed sort of, you know, projects, you know, almost scams in many ways. And we're also having exchanges and stuff like that lock people's funds up, which in my opinion is just complete theft, and there should be criminal charges thrown at these individuals for basically stealing people's money. And that is all I've got for you in this video, guys. A little bit more of a bullish one. You know, we are unbelievably bullish on the future of crypto. It's just that right now I think we have a lot to contend with, and ultimately markets are very much driven by the wider macro stance. All I've got for you in this one, guys. Have a fantastic Sunday, and I'll catch you all in the next YouTube video.